I guess, again, reflecting the EV sort of not so hot these days. Companies thought that they were going to be selling a lot more EVs than they actually are, and actually hybrids are the ones that are more popular.
We think Tesla still represents one of the best earnings growth stories in this industry, and we're buyers at these levels.
This Cybertruck, $100,000 for a Cybertruck. That I have a Maverick. Okay, apparently this does not have the payload of a Maverick, which fits in a small parking spot on any urban street in this country.
All that and more. So let's get to it.
I'm watching Toyota. The ADR shares listed in the U.S. today popping almost 6%. This is the after hours, not doing after hours. So it's gone good day today in the regular session here. They boosted their guidance here, both sales and revenue and profit guidance here. Really strong numbers here for Toyota, given the fact that its rivals like Ford and GM had pulled their guidance, not doing so hot there. One thing I want to note though is that Toyota has sort of said that they've kept their delivery guidance for their full year delivery guidance of 11.4 million units, but they're saying that there's a switch there with EVs. 40% less EVs they see sold in 2020, fiscal year 2024, but that number will be compensated by hybrids. They think that hybrid sales are going to be stronger at the end of the year globally, and we're, I guess, again, reflecting the EV sort of not so hot these days. Companies thought that they were going to be selling a lot more EVs than they actually are, and actually hybrids are the ones that are more popular.
Natural stepping stone for individuals, especially in the US, to go to hybrid before they go purely battery electric. I'm guilty of this as well. Bought my first and last hybrid vehicle in 2016. 2020, I was ready to make the leap. I got a sneaking suspicion that many people in the United States will go through that same trial and error process.
And it's interesting, Rick Newman just mentioned this in a column the other day that was up on our website, and it was a great point out. Just, is that move now going to be, is hybrid sort of like the gateway car to get people into EVs, right? And do those become more popular? And when you think hybrid, don't you think Toyota Prius? That's what I think. Wasn't that the initial hybrid, right? Going back for
25 years.
Yeah, Toyota has been well positioned in that market. So it's interesting to think as we talk about, maybe EV demand isn't exactly where it was.
Yeah.
Well, the OG hybrid car company might benefit from that if people want
They never wanted to go EVs.
Wow, interesting. They wanted to stick with their hybrid model.
They were sort of convinced that we do these things well, cheaply, people want them. Why should we go battery?
Yeah, I mean, that makes sense to me. I feel like hybrid is the perfect way to get a little bit of the EV benefit while also not having to worry about some of the things that we know consumers are worried about, like infrastructure and pricing, for example. And, the EV slowdown is something we've heard from a lot of these car makers. You wonder how that will play out in 2024 and beyond.
Well, it's funny with Toyota in particular because they were so cautious, and then they had to replace their CEO. Akio Toyoda became the chairman. They brought in the Lexus guy to do EVs, and it turns out Akio-san was right.
No, Toyota-san is not right. That short-term thinking is what's going to paralyze your company. It's all well and good. Worry about your profits with your hybrids now. After all, it is about money. But the financial decision to go to battery electric vehicles, it's a no-brainer. Two things can be true at the same time. Legacy auto battery electric vehicles aren't selling. People are consuming hybrids. Yet the Model Y is the best-selling vehicle worldwide at twice the price of the incumbent. That should tell you something. But focus on the short term at your risk. Acquire as much profit as you possibly can while Tesla innovates this new powertrain, revolutionizing the industry. It'll be easy to copy them once they've driven the cost down further than the internal combustion engine, right?
We got a bounce in stocks, and even some of the recent earnings losers are getting love. That includes Tesla, which did break down after its report early on in the season. Let's do some trading and talk some autos. I got Tom White in studio, and we got Garrett Nelson joining us on the line, Vice President and Senior Equity Analyst at CFRA. Okay, so when we're looking at particularly Tesla here first, Garrett, we've got the big stock comeback happening right now. What needs to happen for Tesla to kind of turn the narrative around since earnings?
The stock's been hit really hard over the last few months, but we view this as a buying opportunity. Really, the whole industry's been hit from the UAW strikes. Even though it doesn't affect Tesla, there's been some other headwinds, mainly related to EV adoption in general, which have really weighed on Tesla.
Unnecessarily, I might add. Garrett's on point here. My cash register has been vocal as about me trying to get in on this opportunity. Tesla at these levels with a record-breaking Q4 looming in the distance. My bear case figure has not changed. $364 per share in the bear case. And that's with them producing 1.7 million vehicles this year. Tesla is the market leader in battery electric vehicles, and with all of legacy auto, with the exception of BYD, scaling back their electric vehicle production, you bet your there's opportunity to be had.
And really, it wasn't a great earnings call that they just had, raising some red flags about the Cybertruck, what the margins on that vehicle might look like, and then the production ramp. So, but we really view the concerns as overblown here. Tesla already had a 35 to 40% labor cost advantage over the Detroit 3. And with this new deal that we expect to be ratified later this month, their labor cost advantage is going to widen much more than that. So we think Tesla still represents one of the best earnings growth stories in this industry, and we're buyers at these levels.
You and me both, Garrett. I like that price target of 300. That's probably a base case too. I wonder what the bull case looks like.
The move was interesting. The way Tesla shares got punished on earnings, despite the fact we all knew about their price cuts, and how illuminating those earnings were in terms of post-price cuts and margin contraction. The Tesla's margins still are better than their peers. Correct me if I'm wrong, but it looked to me like both their gross and operating margins were at least on par, if not better, than GM and Ford's from the previous quarter. And I didn't look to see GM and Ford after they reported, but that margin comparison, does it favor Tesla?
Absolutely. So
Okay.
their margins have been much better than the
Even after the
Detroit 3.
cuts.
Even after the cuts, much
Amazing.
better.
I mean, how is that not like kind of the where the rubber meets the road right now? I mean, they've got the scale for EVs, they've got the tech, and it'd be one thing if like the legacy players had some great EV supply chain they could, they already built out or something, but it just seems like the margin is a huge element here.
Ding, 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 ding. Tell him what he's won, Johnny. Your mother right. I would say Tesla has the winning hand, but they're holding all the cards here. Everybody else is just waiting to be dealt in. Tesla's king at manufacturing battery electric vehicles. They have an independent, robust supply chain which is only getting bigger. They have the technology, battery, software, you name it. And they've got margin for days. That's even after these price cuts. This slow EV demand narrative that is permeating throughout all of the finance news media will be put to bed after the record-breaking fourth quarter that Tesla had. Because I agree, there is a slowing of EV demand, of every EV not named Tesla.
Absolutely. And if you look at the EV, who's producing EVs, we think Tesla is one of the only companies that's actually making money in EVs, and they're making a lot of money. So, Ford is the only Detroit 3 automaker that breaks out their EV segment. And so they're expecting to lose $4.5 billion on their EV sales this year. And so you compare that to the profits that Tesla's making. Tesla, obviously, pure play EV company, and the Detroit 3 now slowing their development pipeline of EVs. That's going to really widen Tesla's advantage over the competition. So
I thought Halloween was over.
If anything, this story has really, our outlook has really improved over the last 3 months with what's happening, over the long term. That the stock's gonna, continue to be volatile as it always is, but the long-term story has just gotten stronger in our view.
Hey, stick with us, Garrett. I do want to talk about the legacy names for a second. Tom, you're looking at the options in Tesla, 4.8% bounce. We're back to almost 220. So we're kind of trying to come back up on that old support level around 230 that did break pretty hard.
Yeah, and to that point, post earnings, the stock was down below $200 earlier this week, so getting a nice little bounce here. So looked at the options market. If you want to take that bullish stance here, as opposed to maybe buying the shares, maybe a shorter time frame than a year out. I looked out in the December monthly cycle, so about 43 days till expiration, about a month and a half. If you think that it's going to have some upside, maybe it's going to be limited upside. This is a type of strategy that might work in this environment. And I looked in that December monthly cycle where I'm going to buy a slightly in the money call, the 210 strike call. It's got the higher delta, reacts more like the stock. And then against that, I'm going to sell 2 of the 235 strike calls in December and then buy 1 of the 240. So I'm doing an unbalanced or broken wing butterfly here where I'm going to pay roughly about an $8.80 debit. There's your risk. It's probably closer to $9. The stock has moved up. But if you pay $8.80 on this, you're buying, in essence, in this strategy, a $25 wide bullish call vertical, offsetting some of the cost by selling that $5 wide call vertical on the 235, 240. Unbalanced broken wing butterfly, that means you've got 1 break even of 218.80 on this one. Everything above that's profitability. And then you have that little kicker there at the short 235 strike where you make the most money. But even above 240, it's going to be more than a double on this type of strategy. So this might be the way to play where you can offset some of the costs, but still taking advantage of a grind higher in the shares over the next month and a half.
Putting a couple of hundred shares of Tesla to work for you with the selling of a 235 call, get that premium up front to help you fund your 210 and 240 calls. You're not really expecting Tesla to go much over 245, but if it does, you'll probably get exercised on those sold calls. But you can buy back those 100 shares at the strike price of 210 and 240 respectively. Very bullish trade, but you know me, I'm all in or nothing. I too have a call that expires on December 15th, but it's a 135 call that I definitely plan to exercise. I purchased this option back in the middle of January as Tesla was coming off 52-week lows. Right now it has 150% gain, which I expect to climb higher, but it doesn't really matter. I will be exercising this option at $135 per share. And this is my strategy in a nutshell, folks. I look out years in advance because I know the stock market will have lagging indicators. I'll use that to my advantage for when they finally figure out that Tesla is a multi-trillion-dollar company. I'll have long calls like this 155 call that I purchased at the end of April with a strike price of $155. This thing has an expiration date of December 19th, 2025. Right now, it has an 80% gain, but what do you think it'll look like in 2 years' time? Will Tesla have removed the beta from full self-driving? Will the next-gen vehicle be up and running by this time in 2025? This is my strategy. And again, in January, I will be looking to make calls in the distant future because I know it will not be valued properly by the stock market. But it'll get there.
Okay, Garrett, what about the others? I mean, do you have a favorite? If we are morally obligated to own a legacy name, which should we?
Our favorite name is actually Ferrari. They just reported earnings this morning. It was a great quarter. Their 13th straight beat, and they raised their full year guidance. This company just continues to fire on all cylinders. Obviously a luxury automaker, but if you go back, you look at the longer term, the story, what they did about 3 or 4 years ago, they used to cap their annual production at about 7,000 to 8,000 vehicles a year. They would produce and sell no more than that. And they've lifted that cap. This year, they should produce and sell about 13,000 vehicles.
Guess you can't go wrong with Ferrari. There's no doubt Ferrari will be a mainstay as long as there are internal combustion engines on the road. Even then, they'll be collector's items. Ferrari could sell a steam engine car and still have great margins. But they'll never be in the market of mass-producing vehicles, no matter how much they raise their guidance. It is a pure luxury brand play that's going to be around for quite some time. But for those mass-producing vehicles...
And that, along with Tesla, are 2 favorite names in the industry. We have holds on the Detroit 3, and we have some sells with the smaller EV manufacturers, such as Lucid, Rivian, and we have a strong sell on Fisker.
Before I get you out of here, I wanted to show you some of these headlines that I came across. Charlie Munger says Elon Musk is outclassed by the head of China's BYD, poised to overtake Tesla in global sales of fully electric vehicles. BYD is doing something pretty incredible. They're selling battery electric vehicles at a price point that is way, way cheaper than what Tesla is selling the Model 3 and Model Y for. Yet they're still not outselling them. It's weird. I'm not going to go through this article in the video. I've read it, and yeah, it is what it is. Just like I'm kind of biased with Tesla. Charlie Munger seems to be pretty biased when it comes to BYD, but you know, it is what it is. This article will be linked in the description. Give it a read if you hadn't already. Let me know what you think. And then we had this article, Jim Cramer talking about Tesla and the Cybertruck, but it's a wonderful age we live in. Nothing you say in public will not go unnoticed. And we now have Jim Cramer on record saying the Cybertruck will not sell more than 50,000 in a year, I think. This article too will be linked in the description. I won't go through it all, but I do want to show some of these clips. Let's hear from the man himself.
A lot of people, there was a twin blow against Ford. There was obviously the union. People didn't like the quarter. But then there was also this Tesla, this Cybertruck. $100,000 for a Cybertruck. That I have a Maverick, okay? Apparently this does not have the payload of a Maverick, which fits in a small parking spot on any urban street in this country.
Does he know something that I don't? The payload of a Maverick? $100,000 Cybertruck. Is he talking about the quad motor variant? Where is Cramer getting his information from? I'd love to know.
And the durability of the metal is not there. I wonder whether this man can sell even 50,000 of the 200,000 Cybertrucks, and this may be Ford's era after all of the Sturm and Drang about Sean Fain and how he took it to farming.
I will say with this regard to the Cybertruck, and we should see the first ones delivered at the end of this month. At least that's the plan from Tesla at this point. It's going to be a slow ramp up in production. They're not even going to get up to where they would consider full production until well into 2025. And I also think you should keep this in mind, given the price point, given the design, given the capability of the vehicle and what it's designed for. It's going for the urban market, particularly those urban markets that are into electric vehicles. Southern California, Oregon, Washington, the coasts. You're not going to see the Cybertruck in big numbers in Kansas City, St. Louis. I mean, it's just not going to sell there. Will there be some? Yes, eventually there will be some. But I do not look at this as one, Sarah, that is a vehicle that people are going to say, well, I'm not driving the Chevy Silverado or F-150 anymore. I'm driving the Cybertruck. I just don't see that happening.
Yeah, there's some opportunity, especially when the people in the finance media keep doubting Elon Musk. Can't wait to come back in 3 years' time. Tesla has ramped up the Cybertruck to any meaningful volume and come back. Take a look at this clip right here. In conclusion, Toyota plans to run away with the hybrid model, and I admit it will be fairly lucrative in the short term. But if you're looking out 2030 and beyond, it's probably not the best thing. This is not as easy as Tesla makes it look. Speaking of which, there's some optimism when it comes to Tesla stock. I've got my plans. What's your strategy when it comes to making money with TSLA? And if there isn't enough fear, uncertainty, and doubt in the news media regarding the slowing of EV demand, stay tuned for Tesla's record-breaking Q4. Charlie Munger and Jim Cramer, well-known faces and voices in the finance news media, add their 2 cents. BYD overtaking Tesla? Cybertruck won't do half as many as Elon Musk suggests? Don't believe me? Just watch. That's all I got for you today. Be easy. Peace.